I need to tell you about a story I'm not proud of. For 2 years, I had a pattern that nearly destroyed me. I'd trade well for 2 weeks, sometimes 3. I'd follow my rules. I'd be disciplined. My account would grow. I'd feel like I finally figured it out. Then something would shift. I'd have one big win and suddenly I'm sizing up. Or I'd have 2 losses in a row and I'm either revenge trading or too scared to take the next good setup. Within days, sometimes hours, I'd give back everything I'd made, and I'd be right back where I started. This happened 10 times. 10 separate times over 2 years where I built my account up and then watched it collapse. And every single time I told myself the same lie. Next time will be different. But it never was. Because I didn't have a consistency problem with my strategy. I had a consistency problem with myself, and that's what we need to talk about today. The real consistency problem every trader faces. It's not about finding a strategy that works consistently. It's about becoming a trader who executes consistently. And those are two completely different things. This is the most critical point that will affect your entire trading journey. Most traders think consistency means winning every day. It doesn't. Consistency means being the same trader every day, same preparation, same rules, same behavior, whether you won yesterday or lost yesterday, whether you're up for the month or down for the month, whether you feel confident or scared, the same trader shows up. That's consistency, and it's the hardest thing in trading. Not because you don't know what to do, but because you can't stay the same person under different emotional conditions. So how can we act like the same person under every condition? After a win, you become a different person. Overconfident, willing to take bigger risks, seeing setups that aren't really there. After a loss, you become a different person. Fearful, second-guessing everything. Skipping good setups or forcing bad ones to make it back. When you're bored, different person. Impulsive, taking trades just for action. When you're stressed, different person. Avoidant, paralyzed. The market doesn't care which version of you shows up, but your results do. Because inconsistent behavior creates inconsistent results, always. That's why we must become a trader who exhibits consistent behaviors no matter what. And by the end of this video, you'll have all the insight you need to be able to do this. Let me tell you about 2 traders. Both learned the same strategy. Both understood the same concepts. Both had the same capital. Let's call them Daniel and Marcus. Daniel's week looked like this. Monday, he felt great. He'd won on Friday. Confidence was high. So he took 8 trades, sized each one at 2%. He was feeling it. By end of day, he was down. 5 of those 8 trades were marginal setups he wouldn't normally take. But confidence made them look better than they were. Tuesday, he's nervous now. Lost Monday. So he only takes 2 trades, sizes them at 0.5%. Both win. But tiny gains because he was scared. If he had been a consistent trader, he would have been able to take the same risk despite his emotions. Then came Wednesday. Break even from 2 days of trading. He's bored, frustrated. Market is slow. So he forces 5 trades just to feel like he's doing something. 3 lose. Thursday he's stressed. A perfect setup appears. His actual setup. The one he's been waiting for. But he skips it. Too scared after yesterday. Then he watches it run without him. Now he's angry. Takes a revenge trade on something that isn't his setup. Loses. Friday he's exhausted. No plan. Just reacting. Takes whatever looks like it might move. Ends the week slightly red. But more importantly, he's mentally destroyed. After 3 months of this pattern, Daniel is break-even, not because his strategy doesn't work, because his behavior changes every single day based on how he feels. He couldn't get ahead of his emotions. That's why, because he couldn't be a consistent trader, he missed most of the potential profit he could have captured, and the negative experiences he went through pushed him into more negative emotions. More negative emotions meant more negative experiences. This created a vicious cycle that's quite difficult to escape from, one that eats away at a person and makes trading feel impossible. He was going through one of those stages that every successful trader must pass through. But the real question was this: would he really recognize the source of the problem and take action? Or would he continue to do the same things in the same cycle and expect different results? The choice was his. On the other hand, Marcus was different. Marcus's week looked different. Every single morning, 30 minutes before the market opens, he does his preparation. Reviews yesterday, marks his levels, checks the news, writes his plan. Then he opens the platform. His rule is simple: maximum 3 trades per day. Every trade risks 1%. No exceptions. Monday, 2 setups appear that match his criteria. He takes both. 1 wins, 1 loses. He's up half an R. Tuesday, 1 clean setup. Takes it. Wins. Up 1 R for the day. Wednesday, no setups appear that match all his criteria. He watches the market for 2 hours. Takes 0 trades. Closes the platform. He's completely fine with this. Thursday, 3 setups appear. He takes all 3. 2 win, 1 loses. Up 1.5 R. Friday, 2 setups. Both lose. Down 2 R for the day. He journals both trades. Reviews what happened. Closes the platform. Ends the week up 1 R. Not a lot, but consistent. He manages to make decisions consistently as if emotions don't exist. After 3 months of this pattern, Marcus is up 15 R. Not because his strategy is better than Daniel's. They have the same strategy. Marcus is profitable because his behavior is the same every single day. Good day, bad day, boring day, exciting day. He shows up the same. Same prep, same rules, same execution. This consistency in behavior created consistency in results. And this was the most important part. Marcus was aware that the market is programmed to manipulate his emotions and create inconsistency. And instead of allowing this, he managed to put in the will to act consistently. One consistent action gave birth to another. Every right decision he made positively influenced his next decision. And in this way, he internalized this behavior and became able to apply it easily. This is exactly what being a profitable trader is like, he thought to himself. Here's what most traders don't understand. You can have the best strategy in the world, but if you execute it differently every day based on your emotions, you don't have an edge. You have chaos. Ed Sikota turned $5,000 into $15 million over his career. People always ask what his strategy was. Trend. Following breakouts. Simple. Nothing secret. But here's what made him different. He traded the same way for 30 years. Same preparation routine, same entry criteria, same risk management, same exit rules. He didn't change his approach based on whether he won or lost yesterday. He didn't optimize after every drawdown. He didn't size up after winning streaks. He stayed the same, and that's why he compounded at rates that seem impossible. Paul Tudor Jones made 200% returns in 1987 when the market crashed 22% in one day. What separated him from everyone else who got destroyed that day? Not intelligence, consistency. He had a preparation ritual he did every single morning. He had rules he followed no matter what. When chaos hit the market, he didn't panic and change everything. He executed his process, the same process he'd been executing for years. While other traders were scrambling, changing strategies mid-trade, breaking their own rules, Jones stayed consistent. And consistency always wins when everyone else is in chaos. It was that simple. So why is consistency so hard? Because your brain is designed to react to recent events. It's called recency bias. Your brain overweights what just happened and underweights everything that happened before. You have one big win. Your brain says, I'm good at this. I should do more. You have 2 losses. Your brain says, something's wrong. I need to change something. This is survival wiring. In most of life, this adaptation is helpful, but in trading, it destroys you. Because trading is probabilistic. Any single trade or any short sequence of trades tells you almost nothing about your edge. You can do everything right and lose 3 times in a row. Variance. Normal. But your brain doesn't see it that way. Your brain sees 3 losses and screams, fix this now. And that's when you start changing things. Different position size, different criteria, different risk. You're trying to fix a problem that doesn't exist. And in doing so, you create the actual problem. Inconsistent execution. Let me tell you what the real consistency problem is. It's not that you can't execute your strategy. It's that you can't execute your strategy the same way after you win as you do after you lose. After you win, discipline feels easy. You're confident. You trust your system. Taking the next trade is effortless. After you lose, discipline feels impossible. You doubt everything. You second guess. You either skip good setups or force bad ones. The strategy didn't change. The market didn't change. You changed. And when you change, consistency disappears. You must not change. If the person who sits down at the charts every day is a different person each day, how can you be a consistent trader? If you're not consistent, how can you expect your results to be consistent? Here's where it gets uncomfortable. Consistency requires you to be boring on purpose. It requires you to do the same thing over and over, even when your emotions are screaming to do something different. Most people can't handle that. Boring feels like you're not progressing. Boring feels like you're not adapting. Boring feels like you're missing opportunities. But in trading, boring is exactly what works. The most profitable traders I know are boring as hell to watch. They do the same preparation every morning. They take the same setups. They risk the same amount. They follow the same rules. Every single day. No drama, no excitement, no variation. Just execution. And it works. Not because the strategy is magic, but because consistent execution of any reasonable edge will eventually produce profit. Inconsistent execution of even the best edge will eventually produce nothing. You already know this. You've experienced it. You've had periods where you traded well and made money. You've also had periods where you gave it all back. What was different? Not your knowledge, not the market, your behavior. When you were making money, you were consistent. Same approach every day. When you gave it back, you started changing things, sizing up, taking marginal setups, revenge trading, skipping good setups. Your behavior became inconsistent, and your results followed. Inconsistency follows inconsistency. Consistency follows consistency. The first way to be a consistent trader is to manage to be a consistent person. You must wake up to act consistently every day, no matter what the conditions are. So how do you build consistency when your emotions are constantly trying to pull you in different directions? You can't rely on willpower. Willpower fails. You need systems, external structures that enforce consistency even when you don't feel like being consistent. Let me give you 5 systems that changed everything for me. These aren't tips. These are non-negotiable structures that remove decisions and force consistent behavior. System 1. Pre-trade checklist. Before every single trade, you must answer these questions. Does this setup match all my criteria? Not most, all. Is this my session or my time frame? Yes or no. Am I calm right now? No revenge, no FOMO, no boredom. If any answer is no, you don't take the trade. No exceptions, no negotiations. This system removes emotion from the decision. You're not asking yourself if you feel like trading. You're asking if conditions match your rules, and if they don't, you don't trade. Period. This one system cut my bad trades by 60%, because most of my bad trades came from skipping the checklist. I'd see something move and just click without checking. That's gone now. Checklist or no trade. That's the rule. System 2. Fixed position size, always. You pick one number, 1%, 0.5%, 2%, whatever fits your risk tolerance. But you pick one number and you never deviate. Ever. You don't size up because you're confident. You don't size down because you're scared. You don't increase because you're on a winning streak. You don't decrease because you're on a losing streak. Same size, every trade. This removes one of the biggest sources of inconsistency. When position size changes based on emotion, you're gambling. When position size is fixed, you're trading. I risk 1% per trade, always. Winning or losing. Confident or scared. Doesn't matter. 1%. And because that decision is already made, I never have to think about it. One less thing emotions can hijack. System 3. Max trades per day. Hard stop. Pick a number. 3 trades. 5 trades. Whatever works for your strategy and schedule, but pick a number and make it a hard limit. When you hit that number, you close the platform. Even if you're winning, even if another setup appears, even if you feel great, you stop. This system protects you from overtrading, because most traders don't blow up on their first trade of the day. They blow up on trades 7, 8, 9 when they're mentally tired and making emotional decisions. The limit forces you to be selective. When you know you only get 3 trades, you don't waste them on marginal setups. You wait for the best ones. And because you're waiting, you're fresh when they appear. My limit is 3. Some days I take all 3. Some days I take 1. Some days 0. But I never take 4. Because trade 4 is always emotional. Always. System 4. Mandatory journaling before next trade. You cannot take your second trade until you've journaled your first trade. You cannot take your third trade until you've journaled your second. This creates a forced pause between trades, a moment where you have to stop and reflect. What just happened? Why did I take that trade? What was I feeling? This pause catches emotional trading before it spirals. I can't tell you how many times I've sat down to journal a trade and realized I was about to make the exact same mistake again. The act of writing forces awareness, and awareness stops the pattern. Without this system, I'd take 5 emotional trades in a row and not even realize it until the damage was done. With this system, I catch it after 1. System 5, weekly review, pattern recognition. Every Sunday, I review the entire week, not to analyze my setups, to analyze my behavior. When did I follow my rules? When did I break them? What triggered the breaks? Was it after a loss? After a win? When I was bored? This review reveals patterns you can't see in the moment. I discovered I always break my rules after 2 losses in a row. Always. Once I saw that pattern, I could create a rule. After 2 losses, I stop for the day. No third trade. Because my behavior after 2 losses is never clean. That one insight saved me thousands. I only found it through weekly review. These 5 systems don't require motivation. They don't require you to feel disciplined. They just require you to follow the structure. And when you follow the structure consistently, your behavior becomes consistent. And when your behavior becomes consistent, your results start to stabilize. Let me tell you what happened when I implemented these systems. Month 1 was hard. Everything felt restrictive. I wanted to break the rules constantly. I felt like I was missing opportunities. I felt like the systems were slowing me down. But I committed. 6 months. No matter what. Month 2, small changes appeared. Fewer stupid trades, less emotional swings. I wasn't there yet. But I could feel something shifting. Month 3, my behavior started stabilizing. The prep routine became automatic. The limits didn't feel like limits anymore. They felt like protection. I started trusting the process instead of fighting it. Month 4, results started following behavior. My account wasn't swinging wildly anymore. Small, steady growth. Nothing dramatic, but consistent. And consistency felt better than any big win ever did. Month 5, I realized I was different. I didn't need to force discipline anymore. The systems were just how I traded now. They weren't rules I followed. They were who I was. Month 6, I achieved something I'd been chasing for 3 years. Consistency. Good days didn't make me reckless. Bad days didn't make me fearful. I was the same trader every single day. Same prep, same rules, same execution. And my results reflected that. Not perfect, but consistent, profitable, sustainable. Here's the truth nobody wants to hear. Consistency isn't exciting. It doesn't feel like progress. It feels boring, repetitive, like you're doing the same thing over and over. Because you are. That's the point. The market rewards boring. It punishes excitement. Excitement means you're reacting. Boring means you're executing. And execution is what pays. I know you want the magic strategy, the secret indicator, the pattern that wins every time. But I'm telling you, that's not what you need. You need to become the same trader every single day. You need systems that enforce that consistency even when you don't feel like it. You need to stop changing based on recent results and start executing based on predefined rules. That's the only path to consistent profitability. Not a better strategy, better consistency. Ed Seykota didn't become a legend because he found the Holy Grail. He became a legend because he traded the same way for 30 years. Paul Tudor Jones didn't make 200% in a crash because he got lucky. He made it because his behavior was consistent when everyone else's behavior was chaos. These aren't stories about genius. They're stories about discipline, about showing up the same way every single day, regardless of what happened yesterday. That's what separates professionals from everyone else. Not intelligence, not capital. Consistency. So here's my challenge to you. Stop chasing a better strategy. Stop optimizing after every loss. Stop changing your approach based on how you feel today. Build your systems. The 5 I gave you or your own version? Doesn't matter. Just build them. Make them non-negotiable, and then execute them for 6 months without changing anything, win or lose, up or down, confident or scared, show up the same. Do the same prep, follow the same rules, execute the same way, be boring on purpose, and watch what happens. Your behavior will stabilize. And when your behavior stabilizes, your results will follow, not immediately, but eventually, because consistency always compounds. And compounding is how you win this game. The consistency problem every trader faces isn't about the market, it's about you. Can you be the same trader after a win as you are after a loss? Can you follow your rules when you're bored? Can you stick to your plan when you're scared? Can you stay disciplined when you're confident? That's the test. And most traders fail it, not because they don't know what to do, but because they can't stop reacting to how they feel. Build systems that remove the reaction, build structure that enforces consistency, and become the trader who shows up, the same every single day. That's how you solve the consistency problem. Not by finding a strategy that never loses, by becoming a trader who never changes.